Hi everyone, I'm Andrew with Jesani Wealth Management, and this morning, August 17th, the UK released their year-over-year inflation numbers, or their CPI numbers, and they saw a 10.1, the highest ever increase from July to July. And coincidentally, yesterday on the 16th, President Biden signed into law the Inflation Reduction Act, which unfortunately for investors, really the analyst consensus is that it's not going to do a whole lot to kind of tame the inflation numbers that we've been seeing, although hopefully we've already seen peak numbers last month. But what this act really is kind of a scaled down version of the Build Back Better plan, which is really a focus on climate control and corporate taxes and some other social type policies. So a few bullet points or probably the key components of the Inflation Reduction Act are actually the introduction of a corporate minimum tax of 15%. So any corporation generating $1 billion or more in annual income is now going to be subject to a 15% tax. In addition to that, stock buybacks are going to be taxed at 1%. So it's a special excise tax on stock buybacks. So I certainly don't think that bullet is going to do anything to lower prices for consumers. In fact, on the contrary, that could actually increase prices that are passed along to the consumer as the corporate taxes are increased. So it really doesn't line up to have anything to do with inflation reduction. Secondly, prescription drug pricing reform. They introduced a maximum out-of-pocket of $2,000 to the consumers. So now Medicare is able to negotiate prescription drug prices. Also, the Affordable Care Act subsidies that were set to expire in 2024 are extended now. They were set to expire in 2022. Those were extended until 2024, thus keeping those premiums low for the about 3 million Americans that are utilizing the Affordable Care Act. In addition, they are funding the IRS. The IRS has been saying for many, many years now that they're unfunded. So in an attempt to capture tax revenue, they're funding $80 billion to the IRS over the next 10 years. And lastly, probably the major component is around climate change. So they initiated a new electric EV tax of a tax credit for $7,500 for a new vehicle, $4,000 for a used vehicle. There's also a tax credit in there if you install an at-home EV charging station. There's a tax credit available. Also, a lot of rebates around things like home improvements, like energy efficient windows or energy efficient heating pumps and things like that. So a lot of tax credits and rebates around clean energy. The only thing that they really did on the oil and gas side, which is one of the prices that we've seen dramatically increase with inflation, really more than anything else, is they accelerated the permitting process for drilling. But I think at this point, the oil and gas companies kind of know the game, and they're going to be reluctant to increase or look for new permitting for drilling when they know that in the very near future, a year or two down the road, those policies may be reversed because of the clean energy goals, and they will then have to invest new money into shutting down drilling operations. So I don't think that that's really going to have much of an impact, probably none at all, on our immediate inflation concerns. So certainly the consensus out there from both sides of the aisle is that unfortunately this was kind of just used to pass the key parts of the Build Back Better plan, and it really is going to have little, more likely no impact on the inflation that we're seeing either from an investor perspective or even just in a consumer perspective. So thanks, everyone. My name's Andrew at Jesani Wealth Management. Just wanted to give you a kind of quick recap of the Inflation Reduction Act. Thanks, everyone. Take care.